All right. Thanks for being here today. Super excited to have Rob Lusk with us today from Sidecar. Sidecar is a fund and SPV formation technology stack that can help with capital consolidation, fund formation, and all of that cool stuff. Obviously, the SPV market has been pretty crazy over the last few years, especially over the holidays with the Assure shutdown. At Gus, we've been looking at a lot of different capital consolidation providers and processes, and have been really impressed with Sidecar's software team, perspective on the market, and all of that. We are one of the platforms in the space that serves a lot of different people, including accelerators, angels, VCs, and founders. And what's really cool about Sidecar is that they have offerings that kind of span that stack, whether it's founder-led raises, whether it is consolidating small check angels, whether it's helping an angel group run a sidecar fund and also close deals through SPVs. There's kind of a holistic capital consolidation suite that they offer, which is really cool and I think can be really beneficial as we really try to help those entities connect even more than they do now. Before anybody asks, this will be recorded. We will send it out afterwards, probably tomorrow, but maybe Monday because of the weekend. If you have any questions as we go, please plop them in the Q&A. I'll shoot them over to Rob if they are topical with what he's talking about at the moment. Otherwise, we'll loop back to them at the end. We should have about 15 minutes for questions. So with that, I will kick it over to you, Rob. Thanks so much for being here.
Thanks, Peter. Thanks for having us, Gus. I'm Rob Lusk from Sidecar. It's good to be with you all, and thanks for taking the time to tune in here and give us a look. As Peter mentioned, we're really interested in, and the reason for this alignment with Gus is what does it look like for the future of the venture ecosystem when it comes to bringing investors and founders together. And we think a lot about structuring innovation, capital consolidation, like Peter mentioned. What does the collaboration look like between the different stakeholders, and how can we bring technology to make it more seamless? Increase the amount of capital moving through ultimately, and how can we benefit each party? So we have a role to play in that on the Sidecar side. I'm excited to show you specifically our platform and kind of what we're doing, but also allude to some of the opportunities from a connection integration standpoint. How do you piece all these things together and achieve some of your objectives, right? So the membership or the community building piece of it, right? How do you get all these investors together, source deals, evaluate deals, and then deploy together? What are some of the structures to think about when you're doing that, or some hybrids? So we've seen a lot of cool stuff going on. And then I think there's always this question around the macro, like, all right, what does the market look like right now? What does that mean for how we're doing this? And then we've seen some cool trends. I think as with any market environment, there's opportunities to be had with the way things that are going. And so I would love to talk a little bit about that and what we're seeing. What's cool about the roles that Gus and Sidecar plays, we get to see a lot of what's happening just at a macro level with respect to how investors are doing deals, and some of the cool innovation that different investors are taking on that we can share as best practices for others. So excited to get into all of that, and like Peter said, would welcome questions to help direct us where we want to take this conversation, and hopefully be personally helpful to people who are taking the time here with some things that you're thinking through and trying to tackle. And with that, happy to follow up here after and get into it in more detail. So I'll include my contact info, or we can point you in the right direction of some of the people that we work with, maybe that are taking on some of the same things that you are. So that's the setup. Let's get into it. So structuring, that's this Sidecar kind of plays on that side of it, of what happens when you have a deal and you have a group or other groups, partners that you're trying to work with, and how do you actually bring that capital together and deploy it into a target company or a portfolio of target companies. And so I'll focus specifically on that. But like I said, there's certainly a connection between what Gus is doing and what others are doing in order to kind of round that stack out and figure out how to make it work for you. So Sidecar specifically, like Peter mentioned, we bring structures into the equation. So they could be single asset SPVs, multi-asset SPVs, committed capital vehicles, or hybrids of all of them. And the lead can be the founder who's actually taking the point to pool their own checks that they're bringing in from friends and family, angels, small angels, whatever. The lead could be one of the investors. This we often see as like a syndicate lead, a deal lead, right? Somebody who's kind of bringing others into the deals that they're seeing, or more of a formalized group, right? Like an angel group. We're even seeing different types of derivations of angel groups, investor communities, alumni syndicates from tech companies or universities. So there's now this kind of emergence of these communities that are serving as co-investors, consolidating capital, sourcing deals with each other, right? And so we're building around kind of some of those personas and those use cases. For us, what we're going to do is we're going to form entities and structures for whatever kind of investment strategy that you have, right? So if you want to go deal by deal, you want to raise put together a round for one individual deal, as would always be the case with the founder, but is often always the case with individual like syndicate leads or angel groups as well. Then we spin those up for you on a deal by deal basis. And the benefits of doing them generally, there are a few. One is that you get a clean cap table for the founder, right? So benefit on both sides is how are we able to bring in often what are smaller checks that we want to have in the round, but to do that in a clean, efficient way. So there's the cap table, there's the investor communications, the admin, all of those kinds of pieces that we pull into one easy process. The other parts, there's the benefits with respect to rights. So founders like retaining voting rights, which is a nice benefit. Investors like getting something like pro rata on a deal, where maybe if you're coming in with a bigger check, right, 500K as opposed to your 10K or 20K check, you can start to get some more weight in the investments that you're making into startups. Right, so there's some of those things from like a community standpoint. You're actually now deploying capital, right? You're not just bringing investors together, giving them the chance to talk to each other about deals. But now with that organization and structure, there's a lot of benefits to actually formalizing the way that you're moving capital through. And so we can talk a little bit about that and follow up on kind of strategies around as investor communities, what it means to actually build structure, how you can go about doing that. Do you want to think about adding a committed capital vehicle alongside the syndication with the group? How are you incentivizing group members with the different structures? We can come back to that, but fundamentally, again, you're thinking, okay, we need structures here to pool this capital together, and then really that's where we come in is to take that process end to end for you from a structuring and administrative standpoint, and to make it really easy for everyone via software. So we'll do the banking alongside the entity formation. We'll do the legal. So what are the docs that need to come together in order to invest this way? And then all the ongoing administration. So the regulatory filings, the compliance, streamlining that for all the investors getting in. And then on an ongoing basis, worrying about things like taxes. So the annual K1s that everyone will want to see, removing that burden from whoever's running the point, letting us handle that, and then giving someone really a nice platform experience. So logging into a portal, being able to access the tax docs you need, being able to access investor updates that you want to see, streamlining that for founders, right? So they don't have to worry about talking to 50 or 100 different people. How do we connect all of that into one smooth process? And then last but certainly not least, distributions. So everyone getting their payout and making that really, really easy for everyone involved. So that's really the scope of what we're doing. And then building on top of that with respect to the experience side of it. right? So that's sort of the crux is the transaction. But then going on the front end to deal sourcing, making decisions, that's where really Gust and then this partnership is so exciting. Of thinking about, okay, how do deals actually come together? Who's going to get into them? And then, okay, now we know what this deal cap table looks like. Sidecar comes in, runs all the admin, the transaction itself, the money movement. And I'll give you a look at the platform here, so you can see what that flow looks like. And then on the back end, how is everyone communicating with each other, getting the docs, getting the updates that they need? And so really, I think what's exciting about this is letting more people get involved in venture, right? There's this access thing, more capital moving, more collaboration among these different groups, whether it's a fund, an angel group, and individual investors, all kind of coming together and looking at how they're investing, or just better connecting deals, founders, and prospective investors, which again is where the alignment with the vision that both Gust and Sidecar have going forward. So that's the setup. Like I said, there's a lot to talk about with strategy, and some of the tactics in making this all work, and I think that's really the fun stuff. But I'd love to give you a quick look at the platform, just to give you a sense at kind of what that part of it looks like when you have a deal and you want to bring investors in, or you even want to think about rolling up a fund and saying, hey, for everyone in this group, ante up, you'll get a diversified portfolio, and then, hey, on a deal by deal basis, we'll show you all the deals that the group's investing in, and you can increase your exposure, maybe even for reduced carry, no management fee, right? Something. So there's a lot of cool toggles that we can think about with the incentives. But
I think stuff like that is such a great incentive for angel groups, even just in membership recruiting, right? It's like, okay, you can have active investment. You can also have passive investment across our group and groups that we syndicate with. So as soon as this stuff becomes cheap enough and easy enough, it's easier to bring in small checks, which means there's more new investors. Those new investors flow to more organized angel groups as they get comfortable and write bigger and bigger checks. All of this stuff can come together, and then there can be these nice funds that sit alongside that turn what has been primarily an active investing kind of ecosystem into one that also supports passive investors.
100%. And as we think about even taking that crossover a step further, some of those investments could be into funds of emerging managers, who are then giving you not only portfolio that includes funds, but also increased access to deals. So if you're getting that sort of hybrid combo of diversified pro rata plus deal by deal access, and then you're taking that another level. So now this group is getting deal by deal access to all the deals that of the fund that they've invested with. Right now, you create this really cool ecosystem, like you said, of a hybrid between passive and active, where you can do it as it makes sense for you, right? Sometimes you don't have, sometimes you're on vacation, you miss a deal. Okay, that's fine. One deal really makes a lot of sense. You want to get into it and increase your exposure. The other thing is for these groups is one of the hurdles, as anyone who's done one of these SPVs knows, is managing the allocation and being able to commit and say yes, right? So if you have a hybrid between having dry powder, being able to some degree say, hey, we're legit, like we have capital here, gives you a lot of not only negotiating power with founders, as far as being able to make moves and make a decision, and move quickly, but also the ability to increase that allocation, and bring in the syndication piece alongside it. So there's a lot of cool stuff going on, and again, there's some groups that we're working with that are pushing this forward. And for us, our goal is to just give you that infrastructure to take it and run with it, and be able to. So to that point, one of the things that we've done with our fund product is enable co-investors to come in alongside a committed capital vehicle with one single line item on the target company's cap table. And so we're essentially pooling both the committed capital along with any co-investors into one single underlying SPV, to just kind of bring those two things together and make it seamless. And so for any investors, you're going to be able to look at the portfolio as well as individual deals that you've invested in. And I'll give you maybe it's a good time to get some graphics for support here.
Yeah, let's see it.
And show you guys what's up. All right. So here's the dash for Sidecar, giving you the look here. And so really you have this flexibility between being a lead or being an investor in someone else's deal, right? So we kind of envision this future where you're sourcing deals, you're also investing in other deals, right? So you can see kind of this split screen of, hey, this is my deal that I'm bringing in or my group's bringing in, or these are deals that I've been invited to from somebody else, right? And so you have this ability to manage, both your own K1s as well as from a group like manager perspective, your investors and looking at all of the investors in your group. And I think what's really interesting going forward is thinking about building filters for what different investors want to see, right? Having that kind of CRM setup where you're showcasing deals to the right people, and ultimately just, again, increasing the conversion, increasing the capital deployed, all of those kind of metrics that we're all interested in. I'll give you a look at maybe the live look at what a deal in capital call mode would look like from the manager side, right? So you set up a deal. What's cool about all this technology infrastructure is the automation. It means speed, it means cost, and it also means the user experience. So we're forming the entity, the bank account, and the docs almost instantaneously through either APIs or through our own product build. And so when you spin up a deal on the platform, our service level agreement's 4 business hours, so it's typically like a couple hours, and then you're now to this screen, which is you can actually onboard investors. You can bring investors in. They can sign. They can fund. Really as quickly as you're ready to get the deal up. I'll give you a couple different pieces to look at and kind of talk through what this would look like in practice. So you can see the target to raise, the allocation that I've given out to investors here. Typically, right, if you have a fixed allocation, then you're going to be that allocation management is going to be a crucial component here. I've added a bunch of investors just for the sake of the demo, but really this is going to be the control center. Is what's our allocation? How much have we given out to investors? And then funds received. This is real time. So we get automated reconciliation with banking. So you can actually see as people move through the funnel here to funding complete, what's happening, right? This makes it really nice between managing the relationship with a founder, if that's not you, or in the allocation, or even as a founder, just knowing if you're putting a round together and you have this SPV on the side, what is the allocation? How does that fit into the broader mix as it's a moving target, that you have that kind of visibility. And then the communications piece. So you can provide investment updates to everyone in this individual deal cap table. You can manage expenses, which is cool for groups. So thinking about this, how do you expense deal related expenses as a group? In this case, you can actually manage that on a deal by deal or fund level basis. So draw that down, and you have a ledger system, so everyone knows where that's going and what's happening on that side. And then the actual process of getting them through the funnel, right? So you can filter by stage, and you can see here where they're at. You can leverage the platform for communications, right? So hey, reminder, you need to sign or fund. Typically, everyone's moving through from once they made a commitment to funding complete, pretty much, right, one sitting, and I'll show you why, because it's so smooth just to get through that part of the flow. But you have that visibility throughout. You can invite investors in different ways. So one thing that is really relevant to co-investments or to syndication within a group is this general link functionality. So you can create links for specific audiences with different economics and allocations, and then you can manage allocation requests coming in from those groups. So this is really nice if, again, if you have a community that you want to set it to, you want to segment it out maybe by different membership types, or you want to bring in maybe co-investors outside your group and give them access to the deal as well, all the while managing your allocation where it's at so that you can actually grant allocation. If you're oversubscribed, you can reduce allocations for each individual investor, or if somebody wants to increase their subscription during the course of a deal, we don't want to hold you back from that, right? So you can always come in and increase their allocation. They'll just need to send in the balance. It'll amend the subscription agreement, and then you're moving. One cool thing about all of this is this customization with economics. So I showed you how you can segment different groups with different fees. You can even do that on a per investor basis, right? So sometimes you want to give different carry to different groups. And again, there's a lot of cool tactics and kind of frameworks that we can think about with this, but fundamentally, we enable doing all of those things without the need for side letters. Because we're creating unique subscription agreements for every investor and it's automated, it just makes it really easy to flex these things without all of the traditional complexity that goes into like deviations from some standard setup. So that's a cool point to note. You're getting to funds received where you want and ready to close the deal. At that point, you'll close the investment, and that's really it from your side. So as the lead, you're going to now get the purchase agreement in place, right? So we have different investment agreements, really any equity instrument that you're gonna need, we can plug in. If you have side letters for, let's say, pro rata, most favored nations, investor rights that you want, and then we'll close the deal. We'll handle the regulatory filings. We'll get Form D in, blue sky state filings. That's all wrapped up. So really at that point, notifications will go out. So some of the kind of celebratory setup of, hey, the deal's closed. Hey, here's your number of shares, right, as a reflection of the overall deal. All that stuff that makes individual investors feel good about getting into the deal. And then really from this point going forward, it just comes down to the ongoing management and communication, right? So sending investment updates, which you can do at a deal level, or thinking about like community level communication, sharing new deal flow. This is where it gets really interesting. And one thing to note here is the way we're built and the way we think about this is putting the community first and your brand first when it comes to the experience, right? So how are you sharing deals? How are you sending updates? So thinking about like newsletters, thinking about your own site. And for us, we want to just be plug and play when it comes to how you do that, right? As opposed to kind of like an owned property marketplace kind of setup that exists out there and kind of has a different value prop. For us, it's really about putting the investment community and those connections first, and then leveraging infrastructure on the back end for it. So that's kind of a plug on the positioning that I think is aligned with a lot of the groups that at least that we're talking to and connected with. That's the deal lead side. I'll quickly want to show you the investor side, and then we'll pause on the demo. Again, I'm happy to give everyone a deeper look on some of this stuff. Like you can see the fund, which is similar, but another wrinkle on how you can think about the flow, and then some other pieces that I'd be happy to jump into. But I want to show you.
Rob, real quick before we move on from the investor side, we've got a question just around reporting capabilities to LPs. Is that something you can show off on this screen?
Yeah, so let's see, reporting. We have financial reporting. Typically, we're rolling that out for funds, but now we're going to offer it on SPVs as well. So quarterly financials or annual financials. The investor capital accounts, as well as partner capital accounts, and then like a NAV on an annual basis. What we'll need from the manager on something is just the valuation updates in order to as inputs, and then we'll spin those out. The other thing that we're giving by way of reports are the tax reports, so the annual K1s. And I don't have a good view of that other than just into the tax center. What, you know, the ability to download PDFs. I can probably plug in some PDFs, but one thing to note on that, which I think I can say this now, is Sidecar is done now with all of our K1s for the year, and we'll be sending them out in the next week or two. So it's really important for us, and this kind of speaks to the automation and productization of this, is we've been able to automate K1 generation and financial reporting. And that's, I mean, at least from our world, in my opinion, that's the holy grail. A lot of this other stuff is piecing different things together. But being able to deliver K1s on time and financial reports on time and accurately is, I think everyone can appreciate this, is foundational to the experience and to the relationships with you and your other investors. So I'd be happy to give you kind of some type of look, and maybe even give you like a template of the reports on both of those, kind of what that looks like from the investors in a follow-up. But that's where you'd access them, and then the financials in the document center, you know, pertinent to whatever deals you're in.
Great, thanks. And maybe those templates are something that we can send in the follow-up to attendees.
Yeah, that's a good call. I would love to give follow-up material. So we'll sync on, and actually to that note, if there's any requests for additional material, templates, etc., we're an open book. I mean, we're sharing template subscription agreements, operating agreements, side letters. You know, our thing is, you know, we're not like a traditional law firm where that's sort of our proprietary stuff. And so if you have interest in anything that would be valuable, would be happy to send it over. Okay, so investor side. So you've been invited to a deal. Let me show you this look. So you can get in here from a number of things. Like we're talking about you know, what the integration on Gus could look like, or, you know, it could be your own angel community hyperlink with a button, right? Invest button, so you could show the deal yourself. I'll show you what our deal page looks like. But ultimately you're going to link through, and this is where you're going to end up. And we have an email template as well, but right, the point being, entry point here is disclosures around confidentiality and non-circumvention. So, all right, they're not going to go around you. They're not going to share the deal, kind of standard stuff here. Oh, I'm still here. And here are placeholders on the deal page. So forgive my lack of creativity, but you can imagine hopefully your own versions of, you know, what this would look like. The round details, the SPV details, the about the investment. Typically we'll see like an investment memo here or hyperlinks. One thing, and on best practices, you know, this is something that we're excited to roll out as a feature set, are kind of some of the best practices built into it, just to make it better. So like a pitch video from a founder with a deck embedded here, and then the documents. So you have visibility preferences with file sharing, so you can plug pitch deck or different material there. Whoops. Phew, simple back. That was a close one. All right, so now we got the allocation that I've given myself. In this case, I already soft committed, and so the amount's fixed in here. You could also do a range, or you could look at like a field input, right? So you have kind of different ways that you want to collect. And one thing that we're rolling out here soon is going to be the soft commit outside of the product. so that then when they get to this entry point, right, it's locked in here, as you're seeing now. First time in is the profile creation. I'll show you what that looks like. But as you can imagine, once you get your community onboarded, then it's deal by deal setup, and they're going direct to opportunities, whether they're funds or individual deals. We make this process pretty smooth. You can invest from a business, a trust, self-directed IRA. And what's cool about all of this is that it'll populate just based on your inputs. So we take international investors, and the inputs will just switch up a bit. So instead of a social, you'll want a passport number, or as a business, you'll want an EIN or a foreign tax ID, depending. And the guess where I am. I'm not too far from the Embarcadero, and then the accreditation check. So on the self-certification for 506B deals, meaning you have a relationship with all these investors, and would love to talk a little bit about strategies around general solicitation and maybe how that's a way of sourcing more investors. But for a 506B deal, you know everyone here in your community, then we enable them to self-certify here. And that checks the box for you, for us, for everyone from a compliance standpoint, that they are in fact an accredited investor because of one of these reasons. And what's cool about this is you can switch this up on a per deal basis. So for example, if you need it to be a qualified client, and we have some guidelines as to the compliance side of things to make it easier for you. But if you wanted to do an SPV into a fund, or a fund to fund setup, or you wanted to do a parallel structure to circumvent investor limits, again, cool tactics that we can talk about, then that would be reflected here in the product, right? So certification requirement would reflect whatever it is that you need for that opportunity. In this case, it's an accredited investor that I need for the deal. The team members function. So everyone, both as a lead or as an individual investor, give you the ability to bring in other people, right? Typically, we'll see like a family office where the person investing is like not really the person that wants to manage the software, and it's like, all right, you can add admin preferences, editor, you can bring in a team to support getting through this and across the finish line. As you come in on any given deal or fund, you'll indicate what you want to invest from, which is nice because you can get all of these set up and then manage them as you see fit. Subscription agreement is, again, auto-generated for this investor. So it's going to reflect any of the specific terms and inputs that we set up when we invited them in. And they can download it and check it out. Again, I'll send template subdocs to anyone who wants them, along with anything else. But here's the doc for this deal specifically. And then we have the signing, which is super clean and easy. You sign, you're through here. And this is where the manager, founder will get a notification. Hey, this person signed. They're good to go. And then now we're going to fund. So now we want to get into the actual funding. We got ACH, which is really nice. You can fund with ACH with Plaid. If anyone has used Plaid before, you'll add the account. And then you can just authorize transfers on a deal by deal basis, which is really nice, directly in the product. Wise as well for non-US banks, which is cool. If you're working with international investors and are familiar with Wise. And then the wire option. So wire instructions, you can download them. You'll get them here. We have, again, that automated reconciliation. And so some of the facets of how that works is built into this, which is really a cool part of the mix. Again, you're going to get real-time updates on money movement, even if it's from the wire side. They'll indicate that they've sent the funds and they are now good to go. So from the investor side, you're not leading deals, right? So you're not seeing that other side. You're seeing any of the deals that you've been invited to. You can see them across different groups, and manage your portfolio that way. I should get a K1 in here. That's a good request. So you'd be able to check out your K1s as well as the financials for any of the deals in these two tabs here.
And
So that's the investor side.
Rob, you touched on this briefly, and I saw that obviously foreign investors can use Wise to transfer funds and upload a passport and other identifying information. Are there any other differences to the foreign investor onboarding that are interesting, noteworthy? Any restrictions?
You actually don't even need to upload docs. We make it pretty simple. The only difference, it's a really smooth, so that's one of the big benefits of this is the international money movement. So that's been, I think, solved really through the API integrations that we've worked on with banking partners, the foreign exchange. So it does all come into USD. So we invest via USD out of the product, but we can take any currency. Only things to note, sanctioned countries, obviously be aware of that. So we're doing KYC and OFAC, and that piece is tackled. So you just want to make sure that you're in the clear on that side of it. The only other thing to note is some countries will have delays on money movement. And so we have a list of those countries. It's not like there's, you're not going to get the money, but if you're time crunched on closing a deal and you're taking a check from Mexico, as an example, then we'll just give you a sense of what to expect from a timing standpoint. And that's just with the international money movement and the holds that sometimes happen. A couple of countries in Africa. We've had, I think we've worked with almost any country that, we've worked with most countries that investors have run through at this point. And so we should know more or less what the experience will look like, and we can give you a heads up.
Cool. And in terms of just reporting and tax docs for foreign investors, obviously different localities have their own set of regulations that govern investment in foreign companies. Do you all tackle or facilitate any of that at that point, or is it?
So we're providing the K1s from the US entity. So it's a pass-through entity, all of these vehicles that we work with, meaning that in most cases, and it's a good thing, because they're not going to get double taxed. And so they're not going to have to worry about US tax. But when it comes to their own personal taxes in their local jurisdiction, that's going to be on them to handle. So that they'll get the tax docs from us, and then they'll have to manage the implications for themselves in their local jurisdiction.
Gotcha. Thanks.
Yeah. Yeah, those are good. I'd love to answer any questions. I'll stop there as far as just giving you a look at the platform. We'd love to talk about strategy or some of the high level macro trends, or stay here on the product. Obviously, happy to talk about Sidecar as much as anyone would like as well. So maybe I'll kick it over to you, Peter, and anyone else to kind of give me a little guidance.
Cool. We've got a couple in here, but if anybody else has any questions or any topics they want to cover, please dump them in chat or the Q&A. So one we've got is just, where are you all located? And I think you've answered the second part of this in that you can definitely do business in the USA, but where are you all located?
Yeah, we're a fully distributed team, which has been an interesting ride and maybe a different webinar on the future of work. But I'm in San Francisco. Most of the product and eng team is Bay Area based. Our CEO's in Houston. And we're kind of, I think Aaron might be on, he's in Nashville. We got a New Orleans representation. We got a cool group from all over. So we're a distributed team.
Awesome. And we've got Edgar asking that he's actually got several existing SPVs holding LLCs for closed deals. Any way they can move those onto the platform to assist with ongoing admin?
Oh, I love that question. All right, yeah. So, and one thought I just we were talking about international. I wanted to close the loop on that. We can support international investors, international founders, managers, international assets. So there's really no limitation from a jurisdiction standpoint. It's just that these entities themselves are going to be Delaware domiciled. And so it's important to note, because one thing that we're really touting is a global standard when it comes to investing. And the Delaware domicile is really a solid starting point for the vehicles, and it does not prohibit investing into foreign assets or taking in foreign investors. We have a really good process to reduce the friction on both sides. So I just wanted to make a note of that. And we're working with people from all over, from each part of the equation. So that piece, coming back to takeovers and migrations, this became a big deal with the Assure closure at the end of last year, with thousands of these vehicles needing a new home. And you know, it's always something on the table with when someone wants to move and find a new home, and hopefully that's sidecar where people want to go. That being said, and I actually used to work at Assure, so a little bio background on me, and so it's pretty intimately connected to not only the situation that was happening, but also what led to it and where we want to go going forward as an industry. Subtle plug on Sidecar. That's why I joined Sidecar, and the vision for Sidecar is very, very closely connected to that. And it is a little bit of a part of the answer as well, which is a bit of a nuanced answer. So bear with me. But in order to take on an existing SPV, it's a very manual process. There's no product automation around a takeover, right? You have somebody else's structure, somebody else's operating agreement that you haven't built around. You have to amend those agreements, and there's a lot that goes into it. And so we were faced with the decision around, what do we do? This is a huge opportunity. You know, like there are a lot of people that want to come work with us and a lot of assets. What do we do? But Sidecar has always been fundamentally built around this concept of productization, right? That is the way forward for this industry. I talked about how we automate K1s and how we automate financials, which is huge. There's no way to automate the K1 generation from a takeover vehicle, right? You don't know what's on the other side. And so we made a hard decision to stay the course and maintain what is a standardized, productized approach to the space, and preserve the integrity of what we're really excited about bringing to the market. However, we don't want to just completely leave you hanging, and in a self-interested way, we still want you to be a customer. And so what we did was we partnered with a law firm and a tax accounting firm that are manual, just like everybody else in the space, that can handle a takeover, right? Can take on whatever nuances you have, whatever deviations from any norm that you have, and who are excited to do it. And so we got a volume set up with like, hey, we have a lot of these things. They gave us confidence that they could handle the scale. And so we now have a partnership for takeovers as a solution. So you can get the legal migration handled with the law firm. You can get the ongoing tax reporting that you need, and distributions with the fund accountants that we're partnered with. And so happy to talk to that. And the last piece of it is we'll handle the data. So we'll enable the K1s to be visible on the Sidecar platform, simple deal level visibility for your investors. The goal for us is like, how do we create that seamless experience? We know people want that. A big sticking point why this stuff is so sticky is, I don't want one deal over here and 4 deals over there. How do we bring that together? And so we found a way to do that without, again, sacrificing the integrity from an admin standpoint. And so that's the setup. I'd be happy to intro you and give you, we have a 1-pager on just like what that all looks like, built together comprehensively, how it works with the partners. and then what it looks like on the sidecar side, as far as again giving that seamless experience for investors to be able to have a place to access those deals going forward.
Yeah, and
And for you, yeah,
we
getting the
can
admin.
provide all that info in the follow-up. I think we still have access based on the stuff that we sent out late last year, but we'll make sure that all the info on transitioning is available for folks who are interested.
Cool. Yeah, that's right. We did roll that out with you guys too, and so yeah, this would be a follow-up to that. So thanks for the question, and we'll happy to dive into it if you have more questions on that side.
Cool. All right, couple interesting and unsurprising ones. What about pricing? So what does pricing look like for a basic SPV? What does pricing look like for a fund structure? What does pricing kind of look like overall?
Yeah, cool. So SPVs, deal by deal pricing. So it's a comprehensive, all-inclusive price with one variable, which is distributions. So those will be a per event fee as you get them on the back end, which hopefully you do, and everyone's happy about that. It's 1,000 for the first one, expensed across all the investors in the deal, and 500 for any subsequent distributions. So that's the simple one. Everything else is included in the upfront fee with the SPV for a 10-year term. So we're kind of envisioning the life cycle of the deal. We don't want you to have multiple cap calls over the course of trying to just manage expenses. And so we just will take it as a single close along with the capital. That price point, which also includes up to $1,500 in blue sky fees, it's going to handle all the entity, the pass-through expenses with regulatory filings, which is important to note when you're just kind of thinking of the all-in costs and how some other providers are kind of pricing it out. So that's the context. The pricing itself is going to be a variable with a minimum and a maximum based on the size of the deal. So 2% baseline with a minimum of 4,500 and a maximum of 12,500 on any one deal. So in other words, a deal size of up to 225K will be 4,500 all in. Scales up from there to a deal size of 625K, where you'll hit that 12,500 number at 2%. And then anything bigger than that, you're just going to now get under the 2% number because you'll be capped out at 12,500. So that's the spectrum on the SPV side. And on the fund side, it's a bit different. We'll do an annual fee for the life of the fund. The standard term is 10 years, but we can extend for as long as you need, and it's going to just be that annual setup. The pricing is going to be based on a percentage of committed capital. So whatever and would love to talk about some of the features of the fund and kind of the creativity that you can have with it, but it'll all kind of still be centered around committed capital. And so as you scale up in size, your percentage as a percentage of fees will go down. So I'll give you a couple examples just for reference. So between 5 and 15 million, you'll be at a tier, this emerging manager tier, and you'll be paying 20 basis points a year or 0.2% a year. And if you think about that over the 10-year life cycle, it'll be 2% of the committed capital in the fund. So I don't know, let's throw a $10 million, let's see how good I am at math. $10 million, you're paying 200K for the life of the fund. So about 20K a year as a number there. And let's see, what does it include? Cap calls. So that's a bit different than the single asset structures, right? You're doing cap calls, you're doing multiple deployments. Quarterly financials are included in that as well. So you're getting that along with the annual K1s. And then distributions are going to be the same as they are on the SPV side, that kind of per event setup. So that's I think the pricing. If you're going to do a hybrid structure, now this is kind of the fun stuff for me to talk with you about is if you're going to do co-investors alongside the committed capital vehicle, then you're going to get economics on both sides. So if you're going to syndicate and have committed capital, you're going to get pricing benefits where co-investors are paying less for access to deals. And again, if you think about frameworks for incentives and how you want to structure this with a group, it can become pretty cool with how you position it, as far as why you want to get in the fund and what happens when you get access to individual co-investments. I mentioned how the product is built out to where it's pulling all those together. The pricing is also connected, so you're getting benefits on both sides. But those are kind of the standard frameworks on both sides from a pricing standpoint.
Awesome, thanks. Real quick add on to that. I am assuming this does include initial filing fees in Delaware for the LLC. And are you all taking on registered agency for the company, the LLC, over its lifetime?
Yeah, we're doing it. We're managing all that stuff. So the entity maintenance and those annual filings, that's just all baked into it. You don't have to worry about it.
Cool. Next up, we've got some comparison. And this is an interesting one because it hits on something that we see a lot, even with the products that we build. There's a lot of confusion about where some platforms end and others begin. So question is about comparison between AngelList, Carta, and Start Engine. And I know they're not all direct comparisons, but they each have components that potentially overlap. Let's start with AngelList because they have a directly competitive set of offerings. Key differences.
Yeah, I think, I'll give a shout out to AngelList on this. They have a really great product. As far as the competitors in the market, AngelList has really built a solid product, particularly on the syndicate side. Right, as far as running SPVs, the key difference for us, there's two key differences. One is the productization that we bring to this. Right, they have such a great front end, but it's still a service business on the back end. Now, maybe you don't care. Okay, why do I care? Well, pricing and speed. As good of an experience as you might have on that side, our automation and our efficiency is still going to enable us to be better on those fronts. And so that's number one. Number two, which I think is more interesting and maybe more important for a lot of people, is just like the fundamental positioning of our two products. So AngelList is a marketplace, right? They've built their model around connecting capital and they've monetized that connection of capital, right? So not only are they taking fees on that, but they're also incentivized to build their whole platform around that. And there are trade-offs to that, right? Because if you are a manager or an angel group that has investors, right, you've already built up a community, you've spent time developing a community. The last thing that you want to do is have your admin provider be taking all of those investors and marketing other investment opportunities outside of your community, right? Like that is the last thing that you would want from somebody who's fundamentally trying to structure vehicles and give you K1s and financial reporting. And so there's this double-edged sword with access to capital, right? It's appealing for somebody who's just getting started to be like, oh, I don't need to have any investor relationships and I can go and then put my deal up on the platform and maybe get some takers. Now we've seen how that's played out over the course of time with the saturation and the way deals are being marketed. And there's a lot of negative effects just from a macro standpoint with how that culturally has played out. But fundamentally from like a manager community standpoint, what does it mean to own your relationships, own your community, own your brand? I like to use the analog of like Amazon versus Shopify. Right, so we're building for you to plug us in and enable you to kind of enhance what your investor community looks like. And I think that's where there's this alignment with Gust, is we want to be plug and play solutions to build on top of. Right, yeah. Here's how we're talking about a tech stack. Right, that was kind of the foundation of this setup. Is what does your tech stack look like? This is not about creating a profile on Sidecar or on Gust and trying to go shop that account and that profile on our platforms and through this sort of like network community. And so I think more than anything else, that is the fundamental difference is we're here to help you build your community, to put your brand first. I mean, the fact that you couldn't even like offload the emails of the investors on the platform versus, right, that's just very fundamentally different to how we're built. So I think again, love to talk more about this one, but I think that's a good stopping point on that.
Yeah, and I think it's an interesting overlap with our perspective on things too, just in terms of where the investment market got when capital was cheap, right? It very much felt Shark Tanky and cult of personality-ish. And, I think it resulted in a lot of things that weren't great for the industry. And looking back on where we stand and what you all do, I think it's important to actually build on top of the fundamental structures that have worked. Like organized angel groups are really great because they onboard people and they teach them how to do this stuff. And all of those guardrails help people get into the space in a way that's not going to bite them. And they fuel like the responsibility of the underlying ecosystem, which ultimately shields it from the big boom and bust cycles.
100% agree. And so how are you thinking, how are you being thoughtful about building that community and building that experience, right? What does your landing page look like? How are you onboarding new investors, new members? What does that look like? And how do we support that build, right? So like for us, it's white label, it's plugging in, it's giving you tools to, like I said, that kind of that Shopify standpoint. I think when you get to a level of sophistication and brand equity, which is what everyone aspires to, right? As you build these communities out, you don't want to end up being a profile and an account, right, on this other platform. It goes from becoming a way to establish yourself in the early stages to now becoming sort of something that holds you back and is a detriment to where you're trying to go as a community, as an organization.
Awesome. So real quick, we've got 2 minutes left. I think we can probably get through the rest. Any key differences quickly between the Valbon part that exists underneath Carta? And I think Start Engine is kind of a fundamentally different thing, although they've got some overlap in how they do custody. But let's do Valbon quick, and then we've got one more interesting question.
All right, this is if we were on some one-on-ones, I'd probably be saying different things to these questions a little bit. So I'm gonna try to be diplomatic with the breakdown as much as I can on just the high level. I think Carta acquired Valbon for a reason. There's a strategic move on their part, kind of understanding where they're thinking, which is what were they missing with their product before, that was burning money and was fully service oriented. It was not a product or an automated, right? It just didn't make sense for a lot of the customers that were coming through there, right? It's just like with traditional fund admins. It doesn't, they can't effectively monetize, right, and get margins on that setup. And so they went out and acquired what they thought could be a plug and play solution on that with Valbon, right, to integrate. And I think ultimately they're going to replace their entire SPV product just with this Valbon product. So it'll go from like Valbon by Carta to just Carta SPV, or maybe they'll keep the brand the same for a while. But I think remains to be seen. I think Valbon had only existed about a year, less than 2 years before they got acquired. And so there's a difference again between the front end experience that you're looking at and what the technology infrastructure is to actually facilitate admin. And so ultimately, if it's still the same Carta team running the back end admin with an improved and upgraded front end experience, then ultimately, TBD how that affects the customer, from a pricing standpoint, from a user experience standpoint. But again, I think TBD on how that plays out, but just simply having Carta's balance sheet and the confidence with the brand name and having a new software that was acquired, I think, just bringing those two pieces together doesn't necessarily equate to I think what people want to see in the market. So TBD. But Start Engine, I actually spent time in the crowdfunding space like 10 years ago, and it's kind of what led to this whole world, which was technology to investing. I haven't heard much about them as far as actually being competitive in the SPV fund world, specifically with Reg D
They're
offerings
actually
until
anti-SPV.
yeah. So
So
I think,
Howard is
kind of
very
crowdfunding
against that.
world. Yeah, I think maybe where they've come up more recently is just through their promotion of a solution on the takeover side with SPVs.
Yes.
And I think that's very Assure related. And again, things that I probably wouldn't talk as much about with the webinar, but just kind of that I think that's more of a strategic thing with just given the circumstances of the setup. And so I don't know as much about them when it comes to SPVs or funds specifically, but I think certainly more broadly, there is space for these different types. I mean, right, we've been talking about structuring. So there's a place for Reg CF, Reg A, equity crowdfunding, or, at some point crowdfunding just falls off and it's different ways of investing. So I think there are a lot of good players in that mix as well.
Yeah, and I think they definitely have some interesting thoughts over there just in terms of capital consolidation and using custody rather than SPVs to achieve that. But there are some interesting trade-offs that come with that. And I haven't dug into how they're actually offering transitionary services. But we are now over time, and I don't want to keep too much of yours. Thank you so much for being here. This was great. As I said before, we will send a recording, and I have made notes for a bunch of follow-up information, including the one-pager on how to do the transition services. If you do want to get started with Sidecar, Rob, I imagine you can plop a link in the chat right now, but we will also include one in the follow-up. And Rob, we will probably have you back at some point to try to dig into some of those more strategic stuff in terms of structuring with different regulatory things and whether you're going to raise from accrediteds or unaccrediteds or pursue crowdfunding or do a founder-led raise and what all that means, because there's certainly a lot more to talk about. But thank you again for being here. Thank you to everybody who attended. I hope we will see you all again soon and have an awesome Thursday.
Thank you guys for the time. Thanks for listening. Thanks, Peter. I appreciate you having me.
Absolutely. Thanks for being here.
All right. See you guys.
Bye.